Hi and welcome to Symax Fintech Weekly Market Insight. First of all, a disclaimer. So, trading involves the potential risk of loss of capital. It's not suitable for everyone. Hopefully, it is for you though. And as many companies provide leverage, just be aware you can lose substantially more than that initial investment. The views, opinions, information contained in this solely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. But before you do that, you should consider the risks, your financial situation, your level of experience, and your risk appetite. And of course, you should only risk capital you are prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek some independent financial advice before you risk your capital. Okay, so busy week last week, big moves in the market. I'm sure there's going to be more this week as well. So let's take a look back at last week first. So in the US, CPI was higher than expected, 8.3, and the core was 6.3, which was higher than, as I say, higher than expected, and the markets really reacted to that. PPI core was higher as well, year on year at 7.3%. Retail sales lower. So are these rate hikes slowly getting through to the consumers? Capacity utilization was at 80, which is a major level. 80 to 84 still is like almost, it's a very strong economy. There's orders flowing in, and of course it's up to industry to try and fulfill those orders. Michigan sentiment was below 60, and average earnings were higher. Then if we look at the UK, trade balance was lower than expected. CPI dipped below 10%. PPI dipped to 13.7%. Month on month, it was down 1.2%, which is useful. Retail sales missed. Manufacturing industrial production lower, but on a good note, GDP did remain positive, only 0.2%, but it didn't go negative. For the EU, industrial production was lower, trade balances worse than expected, German ZEW much worse than expected, minus 60. Again, just a little bit on crypto, just the ETH merge went through without any issues. Bitcoin traded below 20,000. And then if we look at some of the other things, gold came under pressure. Oil had its ups and downs. It went both ways. The yen steadied. The dollar stronger again, especially against the pound, which went below 114. And of course, the US stocks market dumped on that inflation data very quickly. There's not too much out this week. Obviously, the highlights are going to be the central banks. So Wednesday, we've got FOMC. And, the big question is 75 basis points, or is it going to be a whole 1% after that inflation data? And then apart from that, we've got housing data and PMI. For the UK, Bank of England rate decision, which was pushed back a week because of the Queen Elizabeth II's death. We will see consumer confidence and PMI out though. And in the EU, we've got PMI also. China and Bank of Japan will make their rate decisions. And in Canada, we will see their CPI. So not too much, but obviously these major rate decisions are going to be the key focus. And in general, all eyes will be on the FOMC on how aggressive they're going. So if we look at the macro picture, inflation, yes, US surprised with higher than expected, 8.3 and 6.3 core, where the previous was 5.9. the expectations was 6.1, and that really rocked the markets. I mean, you know, they dropped over 100 points very, very quickly. And of course, with FOMC this week, now it's a case of, is it going to be 75 basis points, or are they going to try and shock with a whole 1%? Again, you know, just remember, all this is just my views and my thoughts. Stagflation, you know, what is stagflation? It's inflation without growth, and it does remain a high risk for many countries. Recessions, you know, okay, I've mentioned this before in my newsletter for weeks. I've mentioned it a couple of times in the last couple of weeks on here as well. I really now believe that the central banks need to push to drive our economies into recession and create an economic reset. You know, they have the confidence to reinflate the economy, whereas they just cannot control inflation. You know, yes, they force demand lower, but they have no control over the supply side issues that we're seeing. War, lack of workers, supply chains, etc. The list goes on. So really they need to destroy demand to balance with supply, and you know, just drive inflation down to their desired 2%. And then what they can do then is they can reboot the economy. But you know, before they reboot, they're going to want to make sure that inflation has been taken out of the market. So don't expect rates to drop quickly. They will remain higher for longer, and that recession, or the recessions, will create job losses. China has probably, you know, when we look at supply issues, about 20 cities in lockdowns at the moment. There's a new strain of COVID around as well that's been identified. Is that going to return for winter? And of course, the big question is, will it be weak like the Omicron, or will it be aggressive like the Delta? The Russia-Ukraine war is entering its 7th month. Ukraine has been gaining ground though, and obviously, you know, that's a positive for most of the world. We're still seeing energy and food inflation, not as high. And of course, Europe is trying to find a solution to their power problems. They've managed to add a lot of storage to their winter supplies so far, despite Russia pretty much turning the taps off. And, you know, they've been discussing about helping the public by capping the costs, capping the prices they're prepared to pay, not just for Russia, but other members want to make that a sort of a pan level where they won't go above. So whether they will get all those countries to agree to that, we'll have to wait and see. In the UK, they've already put a ceiling. They're helping the consumers. Next month, we will see a price increase, but it's capped, and it's less than what it would have been otherwise, and going forward. So in the UK, companies have got that luxury for 6 months of having it capped, and consumers, the public, for 2 years. There's still that lack of workers and earnings pressure. And I would say that with that cap in the UK, you know, where there was a lot of forecasts for inflation going up to 16, 20%, I just can't see that now. I would expect that they would sort of probably level out at round about maybe 11 or 12%. Maybe by Christmas, or if not by January. Let's wait and see on that. But you know, that's where I see it now. I'm based in the UK, so I do see this. But you know, the economy, okay, it's not great, but I'm out. I still see people buying. So you know, they've got their shopping bags. So it's not as if everyone's panicking for the moment, even though rates are increasing.